All right, ladies and gentlemen, let's get her going here. Start me off. Where to bid to go? Have it like $1,000. Open it up.
Government home loan programs. Welcome back. I'm Ted Thomas. I've been involved in real estate as an investor for more than 30 years. My real estate specialty is a subset of the traditional real estate. That subset I'm going to discuss today is tax defaulted real estate. Unfortunately, this is where the property owner has failed to pay the mandated by the state legislature property tax. Now, non-payment of taxes really has some consequences which are severe, such as confiscation. Now, that means the owner is pushed off the property by the local government, and the official local treasurer will auction the property for 10 cents, 20 cents, 30 cents on the dollar. Auction is a public auction, so it can go as high as the highest bidder will take it, but basically it starts at very close to the back taxes. All right, so this episode is a discussion about government home loan programs. Now, the federal government has dozens of these loan programs which are designed to help as many of the viewers and as many of the buyers as possible. So the government is actually reaching out to tell people we have all kinds of different loans that you can accept, okay? So by that I mean they'll have some low down payment, they'll have some that have payments that are extended and whatever, but there's a lot of government home loan programs, okay? Now, many of these programs allow the buyers, some of them don't even have really good credit scores, but if they're first-time buyers, they get a chance to own a piece of the rock, which is really important. Now, government home loan programs, in many instances, the buyers won't borrow directly from the government. What they do is they go to a local bank and they apply through the local bank or a local lender to get the loan. In other words, the government doesn't handle all the paperwork for the loan. So these loans are watched over very closely by the government. Now, when I say watched over, they're going to have very strict interest rates and they're going to have very strict down payments that are required. In many cases, the down payment will be as much as 20%, and that's usually the big challenge for new home buyers. So when the lender banker grants the loan, it has a government guarantee. So you get the loan from the bank, but if you don't pay the loan, well, then the bank will still get paid because it's a government guarantee to the bank, but the property would still go through a foreclosure. So the government may require, when this loan takes place, they might require PMI, which is private mortgage insurance. That's not unusual. People don't like PMI because it ups the premium. In other words, it ups the payment on the loan. So people don't like it, but if they want to get the money, they're going to have to get PMI on many of those government loans. Low down payment loans have a history of high default. That means the lenders are going to lose money because the property's going to end up in a foreclosure. So many people are not diligent. They're not diligent about making their loan payments on time. Those payments that aren't made on time give people not only poor credit, but they end up in foreclosure. And that's why they have poor credit score. So credit scores are everything when it comes to lending. So most government-backed loans that are guaranteed, they're going to require a credit score of from 640 up to 680. This is really referred to as FICO credit scores, FICO credit scores. All right, those credit scores are very important. I mentioned it earlier, but people that don't have good credit scores, they're not going to be able to get loans from the local banks. All right, does that help people that are in the business I'm in? Yes. Business I'm in is tax defaulted real estate. They're used and abused properties. Some of them need a little work. We can sell those properties using private financing. In other words, sell with a contract of sale. When we sell a contract of sale, we can decide what the down payment's going to be and what the payment's going to be. So that lets us sell properties which we purchased for pennies on the dollar. So we buy tax defaulted property in all 3,000 counties across the United States. We can buy those properties for 10 cents, 20 cents, 30 cents on the dollar with no mortgage and no deed of trust. Well, if we can buy low, why don't we sell it below the tax assessed value, and we can make that margin between buying low and the tax assessed value, and more than likely sell the property. So we bought it low, we can maybe even sell it below that tax assessed value, and it'll sell quickly. Now, if we can add financing to it, that's going to be a good deal. However, don't expect people are going to get government loans if you're one of the sellers of that property. So defaulted auction properties are what we're buying, and we're selling used and abused, and we're actually looking for people that might have a low or not a very good FICO credit score. If they don't have a good FICO credit score, well, they're going to be our client. They're going to fall to us. Why? Because we can change the down payment and be flexible, and we can change the payments. Instead of 30-year financing, we might only offer 10-year financing, but a higher rate. I'll be right back with more information. The local county announces the auctions. Once the auction takes place, some of the properties at the auction are going to be junkers. Other properties are going to be just used and abused, and then there are going to be some properties that just need to be touched up and fixed up, and they're ready to go. So our objective is to buy those properties as low as possible. It's a public auction.
How better go there? How better go there? How better go where? How better go here? How bid now? How better go?
So the prices can go high, because if there's high bidders that want the property, they're going to buy those properties. So we try to buy it as low as possible, but then we don't try to get retail. So we're going to buy it low, and then we're going to try to sell it something under the assessed value. So buy low, sell low, try to make money on the margin. All right, now, how do we sell them? Well, we want to use all the media possible, but we also want to use a contract of sale. Now, the contract of sale really helps us because we can be flexible with the down payment and the payment. But what are we talking about today? Well, we're talking about government loans. Now, the government loans, they're in the business of making loans, but they always require some kind of credit score. And usually the credit scores are going to be above 600. So if yours is below 600, well, you're probably not going to be able to get one of those properties, but you sure could probably buy a property from a tax defaulted seller or someone that was buying at tax defaulted auctions like we do. So we teach our students to go ahead and use contract to sale, sell, and take low down payments and take short-term financing. The key to the business is to buy the property right at the auction and then resell it using a contract to sale, or what's simply called seller financing, which is very important. The way to sell these properties is to go after the right group of people. Now, who wants to buy these properties that are slightly used and abused? Well, certainly guys and gals that are fixers want to do that. How about the people that like to renovate properties? They take an average property, they want to make it look like a palace, and so they go in and renovate them and change them around quite a bit. And so these people are always looking for property, and that's who we want to sell to. And when we can sell to them, if we use a contract, then we can decide what the terms are going to be of that loan. In other words, we can approve them immediately, whereas if they go to a bank, it might take them 2 months to get a credit approval, then they have to get an appraisal, then they have to do a home inspection, then they have to go to a title company. We can do all that in one afternoon. We can make it all happen because we're going to be the owner, seller of the property. All right, now renovators, they have a big demand for money. So they not only need money to do any fix-up, but they need money to buy it. So this is a perfect market for us to sell into. So we buy those properties at low prices possible, 10, 20 cents on the dollar, and then we resell them lower than the market values, and we want to sell to those renovators, we want to sell to those fixer-upper gals anytime we can. All right, now newcomers come along, they have FICO scores that are low. Well, if their FICO score is low, they're going to be rejected at the bank. The bank is just going to say, absolutely no. The government loans are not going to do those people any good at all. If you've got a bad credit score, what they're going to do is just going to cancel you out. They're going to reject you. But in our business, that turns out to be an advantage because those people get rejected. Then they see our ads and all the marketing that we're doing. We do a lot of marketing. We let people know that we'll take them and we can approve them on the spot. Now, do we approve just anybody? No, but they can have a poor FICO score, but they have to have a good job. If they got a good job, then they're going to be able to buy from us. Why? Because we're interested in, can they make a down payment and can they make the payments on a regular basis? That's all we're interested in. We don't care about their FICO score, and we're not going to wait to do an appraisal. We're not going to wait to do a home inspection. We're going to sell the properties right away. The FHA, that's the Federal Housing Administration. They've been around for 100 years. Now, they do make loans. They make them to people that don't have the best credit. It's easy qualifying, but you're still going to have a FICO credit score of at least 600. Now, additionally, there's the Veterans Administration. They make loans and they charge low rates and they have very little or no down payment for service members. Okay, again, this requires a credit score of 600, 660, somewhere in that range, okay? Now, the Department of Agriculture, they also make loans for people in rural areas. and they make many of those loans with no down payment. But again, they go right back to that credit score. It needs to be around 600, 640, 650 in that area. All right, so if you got really bad credit, you're not going to be able to buy from any of those agencies. You won't be able to buy a new house. You're going to have to go to another part of the market to do it. So newcomers are constantly looking for low down payment, low interest loans. Let me summarize this just a little bit. The federal programs are one program that's available, but there's also other programs at the states and some of the counties. So let's kind of review this. We're talking about home loan programs. So your county could have a home loan program. Your state could have a home loan program. The federal government has home loan programs, and private lenders do. The private lenders are going to be the most flexible of the bunch. My clients are in the private lender category. Why? Because we're buying properties at tax defaulted auction, 10, 20 cents on the dollar. We buy them low. These are used and abused houses. Many people will buy, are happy to take a used and abused house if they can just get in for low down payment and have payments to make. Why? Because they'll go ahead and work and repair the property themselves. So the past 30 years, I've been investing in tax defaulted property. I'm an investor, I'm a guide, I'm a teacher, so I'm not a real estate broker, and I'm not an attorney. Ask yourself, if you could buy slightly used and abused properties for 10 or 20 cents on the dollar, and then you could advertise those properties. First, put a sign in the front lawn, then go ahead and put them on Craigslist, the multiple listing service, Trulia, Facebook Marketplace, as many of those medias that you could sell the property, and you could sell it not for the 10 cents you bought it for, but you could sell it for 50 or 60 cents. How many deals like that would you want to do? You'd want to do as many as possible. Folks, if you're going to buy at tax defaulted auctions, you need to look at the property first. You have to have boots on the ground. There could have been a fire, there could have been a hurricane, could have been a flood, could be next to a chicken farm. Those are all things that you probably wouldn't want a house next to. All right. Second big mistake that people make is they don't have an exit strategy. So I just said, we're going to buy them for 10 or 20 cents on the dollar. We're going to sell for 50 or 60 cents. If you're going to buy one of these properties, know what your exit strategy. That's the biggest mistake people make, and then they bid too much. Now, I'm going to run out of time, but before I do, you see those little white circles? That's how many auctions are taking place within that state in the next 90 days. This calendar updates every single day. I'm here today to show you how to make money. To do that, I'm going to show you briefly that there are thousands of tax defaulted real estate properties across the 3,000 plus counties in the United States. This is quite interesting. You're looking at the Ted Thomas Magic Interactive Map and Auction Calendar. It changes every day. Now, I created the calendar and the map so I would know how many auctions are taking place every day in the United States. Now I can show the little guy how to make money. Most importantly, I created this system so I could have an auction list for each auction 24/7. Small counties, small population counties, they'll have dozens of these properties to sell, sometimes hundreds. Large population counties will have hundreds, sometimes thousands of tax defaulted properties. This is all available to you. Don't forget, request your free gift right below me.